In this video, I'm gonna be revealing the trading strategy that could pass you all the funding challenges that are out there. I will be dissecting it into steps and keeping it systematic and rule-based in order to remove all emotions. So stick till the end so you won't miss any detail. This strategy is a combination of many ICT concepts. As we know, ICT has many concepts, but we don't need to know them. We can know them all, but we don't need them all for our trading strategy. So let's get into it. We will start on the 4-hour time frame. As you can see, we went higher towards this area right here. Okay. If we want to make this, refine this, okay, we can see that we have this order block right here, that this is an order block because after it's the last bullish candle before the drop. Okay, as we can see, it was mitigated right here. So now this becomes our area of interest. Okay. Then we go lower, and this is also an area of interest. Then we break below. So we have two areas to look for. First is this, and second is this one. Okay. We will have to go to lower time frames in order to refine those entries. But now we're gonna stick to our example. So as we can see, we came to a supply area and we went below. Sorry, a demand area and we went below. So we broke the structure right here. Now we know we are bearish. So we are expecting a retracement. Okay, this is the 50% because we have basically nothing else in this area on the 4-hour time frame. But if we go lower to the 1 hour, we can see that we have this area right here. Okay, so this area is really big as an order block. So we want to make it even smaller. We're gonna go lower. So what we are doing right now is we are defining our supply area in order to go to lower time frames and find the entry that we need, because we know we are bearish, we know we want to continue lower. This is the higher time frame context. So we are trying to find a place where the price will react from. And as we can see here, we cannot refine it too much on the 15 minutes time frame because this is our buy to sell. Okay, what about we go lower to the 5 minutes, and now we can see that we have this area right here. Okay, we can also refine it to take only this, but this was mitigated as we can see, so I'm gonna take this whole area as our area of interest. So as we can see, from this whole area to making it smaller just by going lower in time frames. Okay, but when we go lower in time frames, we might not get an entry because the price might not come to this area, but we should be okay, totally okay with that, because the reward that we're getting is huge. So now we do nothing but wait till the price to come back to our area. Okay, this is the 9:30, 9:45, 10. This is the open. At 10 p.m. New York time, we are in our area of interest. And now we go lower. Okay, we go lower in order to see the price action. So as we can see, the price is reacting from our area. And now, okay, this right here is what caused the break. Okay, this area is what caused the break right here. As we can see, we retested it right here, so this bearish candle, and then we went higher. We came here, we retested this candle, but we didn't retest this one. Okay, we went higher and we failed to do a higher high. We made a higher low, so this is a failure swing. Okay, and the price did not break structure here. Sorry, this is not a break of structure right here. This is not a break of structure. Why? Because this is our low, this is our low, this is our high, this is our low, this is our high, this is our low, there is no high, so this is not a break of structure. We need to wait for the price to go below this area. Okay, now we have a change of character, we have a break of structure right here. Okay, and the price reacted from this order block right here, because we did not retest this, we retested this from the beginning. Okay, So now what are we waiting for? We have 2 points of interest. We are in the bigger area of interest. We came into it, we saw a furniture swing, and then we saw a break of structure. So we saw a weakness in price. This is what we want to see, a reaction. We got our reaction. We have two areas. We have this area right here, okay? And we have this area right here, okay? So now we have two options: either take the trade from here, put stop loss here, or take the area for the trade from here, put stop loss above, okay? Sorry. Or just wait till this area and have a really tight stop loss above this, okay? Targeting the lows. I wanted to wait for this area because we have fair value gap right here, and this was the last candle before the drop, okay? Before the break. First here we went below those, and then we continued lower. So we have this and this, but I preferred to take this one right here, okay? Now we're gonna see the price retrace back. It could retrace, it could not. Sometimes it does not retrace, but it comes back really later. So you should be okay with missing a trade, but the reward for these kind of trades is really high. Okay. The price comes to this area, it doesn't show any signs of weakness, but we are actually taking a limit order right here. We just want it to be as rule-based as possible. Let's wait if we're gonna see if the price is gonna take us in or not. Okay. This happened while I was waiting for the trade, but as we can see, this is engineered liquidity because we can see the order block right here, and the price is just consolidating below it. The people who do not have any patience, the people who are not confident about their idea, they will just go out and not trade this. The price will go without them. That's why you need to always understand the big perspective of the market, not just the lower time frames, okay? This is just for entries, but this stop loss, 3 point stop loss, makes sense because if it actually goes above it, it's gonna invalidate our trade, or it's gonna be a liquidity grab, then we will look for the entries. But if it goes above it with a full candle close, then it will invalidate our trade. Okay, let's see what happens next. Okay, you can have so much FOMO at this moment, okay? When you see the price doing this next to your entry area, you can have so much FOMO. That's why you should backtest and trust your system. If you get an entry, you get it. If not, then you didn't, and that's it, okay? Trust me, in real time, this can give you a big FOMO. Okay, we are in the trade now. Everything, we just wait and see what's gonna happen. Basically, we can have the first TP right here, okay, and then our second TP at this imbalance right here, okay, and then we can actually, basically, this is a retracement of a bigger move, okay. This is why this trade could end up in a big risk to reward, because this is also imbalance right here, or we can also wait to remove the liquidity, the sell side liquidity below. My idea was based on a higher time frame, so why would I put my take profit based on lower time frame? Okay, I can remove some of the profits, but if it comes from the higher time frame buyers, that means we're bearish. I can keep it, and as you can see, this is a great place to take a trade. So the price comes here, it takes us in, and then it directly shifts downward. Okay, what is the reason that it just came here and went below? I mean, this is what it came for. This price just retraced in order to the institutions, the banks, I have no idea, but they are always buying to sell, which means they come back in order to close this position, their positions. Who's doing it, why they're doing it, how it's happening, we don't care. We just know that this happens the whole time. Okay, so when the price comes back here, they're always buying to sell, so they want to close their positions. We put our trade the same place they want to close their positions, because this is when the real move will happen. Okay, so we do that, and then we just wait. Okay, this, like, whatever the RR is, it doesn't matter, but the idea is there. Okay, like, 30, 28, 6, 5 risk to reward. To be honest, everything, like, look at this, just right away. But the context is there. Okay, sometimes gonna give me this risk to reward, sometimes I'm gonna get 3, but you understand the concept. We took this trade based on a higher time frame bias, and everything was systematic. Why did we put our area here? Okay, how did we refine it? How did we think about it? What is the higher time frame context? Everything was rule based. Okay, so if you want, I can make a video doing it like a step by step by step by step, tell you each move how it can be defined in the rules, 1, 2, 3, 4 rules, so we can keep going with the strategy. If you would like to do that, if you'd like me to do that, please let me know in the comments, and give me a subscribe if you like this video. Subscribe and like. And currently I'm in a trade right here for the same concept, guys. Same concept. Okay, this is the area of interest, this is the supply. My only issue with this trade is there is no big objective to the downside. Okay, but the whole concept of taking the trade is here. See, this is my entry, this is my stop loss right here, and why? Let me show you the 1 minute time frame. So we came here, this was my first area of interest. We broke structure, we broke this area, we came back, I took a trade here, I took a loss, but then my second area of interest was here. Okay, this other yellow part. And now basically I made both of my both this trade and this trade, I made them with this trade. What I want you to see is this is my area of interest. Okay, I waited for the price to come back, I took the trade, my stop loss above the high, and now as we can see it's playing out. We will see what's gonna happen. This is the trade update. I just took profit here at this area for 126.5. Obviously we can see the price continuing bearish, which is also a huge trade, but 126.5 is enough for me for now. So this strategy works, guys. You just need to be patient, you just need to backtest it and understand what the market wants to do next. Okay, if you like this video, then watch this video right here. You're definitely gonna enjoy it.